Let's get right to today's market action. We have Patrick Kaiser of Brandywine Global. Patrick is here to tell you which two sectors, he's going to keep this simple, you should be in right now. Kim Forrest of Fort Pitt Capital Group on why she says the market is comatose, but she also knows what'll snap us out of it. And Larry Shover joining us from the CME. Let's start with Larry. Consumer confidence better than expected. Durable goods ex transports better than expected. New home sales better than expected. And the market's tank. Why?
Why add on top of that CPI on Friday better than expected? Right now we're back to that good is bad environment, something we've seen before, where again I say the market participants haven't reconciled the fact that the Fed will at some point raise rates, probably sooner than they think. The market now is getting spooked, getting a little bit nervous. Keep in mind the last 20, 30 points up have all been on apathy and on fear of missing that next big rally, which has not come to fruition. So really, it's just good is bad. That's back to where we are right now. It's as simple as that.
Well, Kim, you believe also that the market views this cash that the Fed is printing out as kind of morphine, and they may go through withdrawal. However, you also have some cash. I'm wondering on a day like today, would you use some of your cash to buy into stocks? And if so, which ones?
Well, we would put money to work on a day like today. There was nothing that was really in our price range. So we are very, very price, we determine what a good value is and we try to hew to that. But we believe that the Fed's imminent raise here, whenever it happens, is going to give us an opportunity to buy in, and we will be buyers then.
Patrick, with all the data that came out today, how can you not be at least long-term optimistic? Maybe short-term, we're still seeing some middling and bottoming of data, and we'll still see some weakness. But where do you stand, optimistic or pessimistic for longer-term, 6 months to a couple of years?
For the longer term, we're very optimistic. We think that while the market looks fairly valued right now, there are still pockets of good opportunities out there. And, any one day, it could be a bad dart. I'm really hesitant to explain. I mean, that's why they call it the random walk down Wall Street. So any one day, who knows? I can't tell you what's going to happen over the next month. But when we do look at longer term, we are optimistic because we see strong fundamentals for the U.S. economy. Things are getting better. The economy is still growing. And I think that's a reason for optimism for equity investors. Plus, bonds aren't a great alternative, as we've all been talking about for a while.
Larry, our stocks have been kind of flat since the first of the year, but not so in Europe, where they've had a boom of over 20%. Yep. I'm wondering which stocks you see as more at risk right now, European stocks or stocks in the United States?
I think it's United States without question. I would never say get out of stocks altogether, but relative speaking, I would say European followed by Japan. Both of those stock markets make a lot more sense than what's going on here. I feel like we're at the end of the expansionary period here in the U.S. I'm not saying we're going into recession, but productivity has dropped 2 quarters in a row. Wages are increasing, but the output is shrinking at an alarming rate. Put that aside also, we have flows are going to Europe and to Japan. That's where investors need to be going. But I want to be really clear. I would never say coast is clear investing works. You should never sell all your weighting in the U.S. I would just be at or a little bit underweight in the U.S. right now.
Okay, well, let's say you're in the U.S., Kim. What are you buying right now? What are you accumulating at this point? Give us some names.
Sure. Well, we think the economy is getting better, and because of that, the stocks that we think are going to benefit most are those cyclical-oriented stocks, so that's technology. We like IBM and Intel. And then industrials, and we like Boeing.
Well, Patrick, airlines, speaking of the airline industry, have found a great tailwind with these low oil prices. Is there one airline that sticks out to you as a good bet now?
Yeah, well, there's several, but the one I'd highlight right now is Delta, which is trading at less than a 10 times PE on this year's expected earnings. All the airlines are benefiting from low fuel prices, but clearly Delta is one of the best managed ones. I read a note last week that somebody said, well, Delta this quarter is going to put up a respectable 16 to 18% operating margin. And if we've gotten to the point where people are dismissing airlines because 16 to 18% isn't good enough, yet they have under 10 PEs, tremendous opportunity. The stocks are down a lot. I agree with Kim. I mean, I think cyclicals are the way to go. Personally, I'm, more of a fan of things like the airlines and the autos, a little more kick to them, perhaps, but, a lot cheaper, good yields in the case of the autos in some cases. Again, single-digit PEs. But I think cyclicals and rising interest rate plays are really the place to be.
Kim, let me flip it back to you then. Is IBM a dividend play? Because they've had quarter after quarter of shrinking revenue. People who are smart either love this, like Buffett, or people who are very smart think this thing is over, or it's just a services company, and even that it's not getting a lot of heat.
Well, there's a couple of things. It's a big, complicated company. Some of it is they're divesting some of their bad margin businesses, and I applaud them for doing that. I will say the growth hasn't been there, but I have to tell you this. I have never been so excited about a concept. The cloud is just exciting to me. I think it's going to change the way we live, and I think IBM is well positioned to help companies get their data into the cloud and change our lives. And that's the short IBM story that I have for you.
Kim Forrest and Patrick Kaiser, thank you. Larry Shover, always wonderful to see you. Thanks.
So what is moving the markets today? The economy?